And hello traders, and welcome to another video. So in this video guys, we are going to talk about imbalance. Okay, so I'm going to explain to you guys the importance of imbalance, what imbalance means, what imbalance represents. I'm going to show you different kinds of examples on the charts, and yeah, I hope you are going to enjoy this video. So basically, imbalance or inefficiency in market happens when there is, for example, more buyers than sellers in a market, and when everything happens like fast. Okay, so usually imbalance represents some kind of gap in a market, and I think that everybody knows what gap represents. Usually when you see a gap, I don't know, 70, 80, maybe 90% of the time, that gap gets filled. So you're gonna have a big gap in the market and price is gonna continue to trade to the downside, and then at some point, it's gonna continue up to fill that gap. This is the same thing as imbalance. Imbalance tends to get filled, also 70, 80, 90% of the time, and you can use imbalance in your favor. So if you have a trade and you have imbalance in your direction, let's say you want to buy something, and you see that price has left imbalance, that can be your positive confluence that price is going to get that to take that imbalance, and your trades are going to be more high probability when you're trading in the direction where the imbalance is. Also, it can mean that you're going to have a bad confluence, so maybe you want to take the trade and below or above your entry there is an imbalance, and you're like, do I take this trade because we have imbalance left behind, maybe it's risky. And in this video I want to explain really everything, guys. So first thing that you need to learn about imbalance is that imbalance doesn't need to get filled right away. Okay, so I see traders all the time just talking about imbalance and liquidity, and imbalance and liquidity, it's important, it's that, and they do not focus on price action. So traders are gonna come and they're gonna see like a standing price action, for example, impulse to downside, and they're gonna see something like this, boom, and they're gonna look at this, and they're gonna have this order block right here, and they're gonna have this order block right here. Okay, and here price is going to leave imbalance behind, and because of that imbalance, they are 90% of the time going to focus on executing their trades here on extreme, and they tend to forget that imbalance doesn't need to get filled right away. Okay, so have that in mind. So as you guys know, this zone, we use it as a momentum zone. Price is clearly indicating to us the price wants to trend. We have momentum, correction, momentum. What are we waiting for? We want to see that pullback, corrective approach to this order block for a continuation to the downside. And they are going to ignore this trade because they see a negative confluence of imbalance, but they forget that imbalance doesn't need to get filled right away. So if you see that you have a high probability setup here with all the confluences on your side in your favor, you should take this entry and not think about imbalance, because what can happen is that you're gonna get in the trade, you're gonna have all the confluences, positive confluences, and then later on price is gonna maybe start to descend, and then it's gonna get filled this imbalance. So imbalance doesn't need to get filled right away. And this is why when you learn forex, sometimes it's not good to learn everything, because everything is gonna get mixed up in your head. I don't say of course that imbalance and liquidity, looking at all those things is bad. No, but traders tend to overcomplicate those stuff. They think about imbalance and they're like only looking forward and not looking at anything else. And they're gonna ignore a lot and they're gonna miss a lot of trading opportunities because, there's a negative confluence of imbalance. But they forget that price doesn't need to fill that imbalance right away. So, for example, guys, if you have this same exact pattern, ascending price action, impulse to downside, retrace, impulse to downside, and you have left imbalance here, and you have order block here, and you have order block here. If you have aggressive retest here, or you have a weakness here, then of course, you're looking at the price action. Then of course, this is safer to trade. You're gonna trade the double confirmation entry here. Of course, those entries are more high probability. But if price action tells you that the candle close is strong and you have a corrective pullback to that zone, you are taking advantage of this momentum zone because price is clearly indicating to you that it wants to trend to the downside. And why lose opportunity? And this is because people are too focused on the concepts and not really trading what they're seeing, what price action is telling them that is happening on the chart. And that's a big problem. So I want you to remember that, price is dictating you really and showing you what it wants to do. And imbalance doesn't need to get filled right away. Really, really important, guys. Okay, so right now I'm gonna show you what imbalance actually is. So you're gonna have, a few candles to the upside, guys, and when you find space in between the last candle's low and this candle high, and you have empty space in between, this is imbalance zone. Okay, so as you guys can see, we have this candle we have this candle low, and we have this candle's high, and there's an empty space in between. It's just nothingness. There is nothing in between these candles, and this is called imbalance because buyers were aggressive. There were not a lot of sellers in the market. There was buyers. There was an efficiency. Boom! Price moved way too fast, to the upside, and price tends to get that imbalance filled. But price can get that imbalance filled in minutes, hours, or maybe even sometimes days or weeks. And there are traders who are gonna have, for example, imbalance, and they're gonna have this ascending price action. And a lot of them are gonna look in this price, it's gonna be days and days and days, maybe weeks, and they're gonna short because they want to get involved in this imbalance. So I'm gonna show you examples in a few moments, guys. But what imbalance is basically is price moving in one direction too fast and leaving imbalance behind. So when there is this candle, you're looking at this candle in the middle, the big one. So this candle low and this candle high, they do not touch and they have empty space in between, and this is called imbalance. And usually price tends to come back in this area. So imbalance basically acts like a gap in the market, So in the right example, you see that we do not have imbalance. Why we do not have imbalance? Because we have wicks. So we have wick here and we have wick here, guys, and you see that there is no empty space like here. So this wick and this wick candles are touching. They're touching each other. So the price didn't made that fast impulse to the upside, and made an efficiency. We do not have an efficiency here because this candle high and this candle low and this candle highs are touching. Same example here. We do not have imbalance here because this low here and this high here are touching, and there is no empty space in between those candles like here. So here we have, so as you guys can see, the wicks are small, they're not touching, we have empty space. Also, again, as well, here, the same thing. So basically, quick lesson, what imbalance is, guys, as example, and I'm gonna show you right now a few examples on the charts. So in this example, guys, I'm going to show you what, because this is really, really important lesson. Okay, so as you guys know, we do not trade pure smart money. We trade our own way, hybrid. Okay, hybrid is the way we trade. And the point is that we want to eliminate those bad things that smart money traders are doing. And in a lot of cases, guys, again, smart money traders are too over-focused on liquidity and imbalance. Okay, and imbalance and liquidity really play a major role in trading. You know, that's a fact. We cannot ignore that. But there are the times when you can use those confluences in your advantage, and sometimes they're gonna be in your disadvantage, because again, smart money traders, when they see imbalance and when they see move like this, they sometimes tend to only want to trade, you know, that imbalance. So for example, you're gonna have this impulsive move to the upside, and you're gonna left a lot of imbalances behind, and you're gonna have this ascending price action, and there are gonna be traders who just want to short. They're gonna have only a bias, you know, because they only see that imbalance. Because if you trade, if you want to take trades, short trades here, you want to take your trade shorts, and you know, okay, change of character happened here. You have all the nice confirmations here. You have your order block supply zone. You want to take your trades here in order to have a little bit more confidence, because you are targeting imbalance. So you can use imbalance in your advantage when you want to get involved in a trade. So you want to get involved in short position here to fill this imbalance. And they tend to be over focused on this. And when they see momentum in a market like this, their bias is going to be only shorts. And they're going to see only shorts. And this is what I'm trying to teach you, to not think like this. Okay, and it is better to read price action, and what price action is telling us, we are acting accordingly. Okay, because sometimes, guys, we are going to have this massive move to the upside, imbalance left behind, and you're gonna see something like this, price starting to break these highs impulsively. And this is indication that price action wants to trend. You're gonna have imbalance here, unmitigated order block here. You're gonna have imbalance here, unmitigated order block here, and price just gonna do this, boom, again, continuation. And you want to get involved here because momentum is present, and price action is telling you that it's putting in higher highs in the market, leaving imbalance behind. So price action is clearly indicating to you that it doesn't care to fill that imbalance. It just doesn't care about imbalance. It doesn't care about unmitigated order blocks. It doesn't care about liquidity. It doesn't care about anything. The trend is bullish. And when trend is bullish and when momentum is present, there is the time when you want to take advantage of that market, where you want to buy, not sell. And people, because they see this imbalance, they're gonna tend to have bias. And again, guys, you do not want to have a bias when you're trading. Okay, so you do not want to predict anything. You do not want to think. Okay, you want to have a systematic approach, and you want to really think, react to the price action. So what price action is telling you, you are doing that. Period. Okay, it's gonna be really easier to trade. So they're gonna be over focused on shorting here. They're gonna miss this entries, or they're gonna say, this trade is a little bit risky for me because I have imbalance below. Look at all of this imbalance. Price is most likely going to continue to fill that imbalance. It doesn't work like that. It doesn't work like that. Price can easily continue to move to the upside for weeks before price gets to the downside and starts to fill all of that imbalance and liquidity, you know? So I want to teach you that when there is a momentum involved, you want to think differently, and you do not want to look at this imbalance as a negative confluence. You know, you do not want to buy here because, you know, prices has left imbalance. You want to take advantage of that momentum and think differently. Okay, again, guys, everything is in price action. If price action shows us here that we don't have momentum, shows you impulse, imbalance left behind, and then you see a standing price action, break of to the downside, and you have this nice order block here, and you have all the confluences, yes, you can use that in your direction. You can use imbalances in your direction, you know, but there are also a lot of things that, you know, people are ignoring. Again, everything is in price action. Learn to read price action. Price action is the language of the market, and everything is going to be clear to you. So as you guys can see, we have strong move here. We have a lot of imbalances. As you guys can see here, you know, this candle high and this candle low are not touching. So there's empty space. This candle high, this candle low are not touching. We don't have imbalance here, but here again, we have imbalance. This candle high and this candle low are not touching. Here we don't have imbalance, and then right here again we have imbalance. This candle high and this candle low are not touching. We have empty space in between. Here you can see that we do not have imbalance, even if this candle was quite bullish, more bullish than all of these candles. But again, there's a wick here, there's a wick here, like an example that I draw for you. So, you know, those two candles are touching, there is no imbalance here. Okay, so right now price action is showing you that momentum to the upside. Retrace momentum. Again, we are breaking impulsively. We are breaking these highs impulsively with this bullish momentum. And what is price action doing? It's coming correctively on your order block. You one retrace, second retrace, third retrace. So basically this is move to the upside, retrace, break of this previous high impulsively. You have your order block here. Price comes 1, 2, 3 correctively, building even a liquidity on the way down, liquidity from this, you know, and then you want to get involved to ride the trend to the upside. Okay, also another fact that you're looking at is that you're trading AJ here, and you already know you have this longer ascending price action on JPY pairs. If you look at this, there is a trend involved in the market, so you're trading with the trend, you're taking continuations with the trend. You know, perfect example of continuation trade. Beautiful example, actually. And I'm telling you this because there are traders who are going to look at this as a weakness, and they're just going to look for break of the low to trade this for shorts. And they're going to miss buy opportunities because they're over focused. Their bias is they want to short because there's a liquidity or there's imbalance, etc., etc. You do not want to have a bias. You want to react based on what price action is doing. Okay, guys, so I'm just quickly going to just do this. Okay, so liquidity here, you have also liquidity here, as you guys can see. Price action moving up, moving up, moving up. I do not want to lock profits or anything because, you know, this is the beginning of the videos, etc., etc. But yeah, it would be a massive trade. We would have even a scaling trade, you know. And yeah, this would be another scaling trade, really massive percentages. We would have one here, massive percentages. Only this first trade would bring you around 15%, and we had 2 scaling opportunities here. Sorry, 3, 1 after that. Then second, and then third would be a stop loss. But two trades will be running in profit, and this initial first position, third one, because we use scaling all the time. Again, I'm gonna talk about scaling in the future videos and why is it important to scale in the position. But again, guys, look at how much percentages you have won because, you know, you were trading with the trend. And what happens next? Look at this. How many candles happen? Look at this big bullish move to the upside. You were earning a lot of percentages, and then after then, price broke this low with huge momentum to the downside. We saw this momentum push down, and then price started to feel this imbalance and start to go to feel everything. So this is what I'm talking about. Sometimes you're gonna have imbalance like this, but here you're gonna have a continuation trades for buy opportunities, and you're gonna miss them because you're over focused on this imbalance here. But that imbalance here doesn't need to get filled right away, and sometimes you can take advantage of this most recent momentum to bank some profits, exit. Again, everything is automatic. We do not you're gonna see why again hybrid is so powerful, because you do not make a decision where you want to get out of the market. You know, this is where we get out of the market, but this is fixed. This is what market does. We do not make decision where we want to get involved, where do we get out of the market. Market does that for us. Okay, so we're just managing our position with the hybrid roles, with our management roles. But again guys, it's gonna be everything explained in future videos. But again, you know, just a quick example that imbalance doesn't need to get filled right away, and sometimes you can take advantage over the price action. So this is why you never want to have a bias when you're trading, bullish or bearish, or you do not care about that. You care only about price action and what is price action telling you. Okay guys, so in this example here, this example here, I'm gonna show you a continuation trade. I took this trade. I was live in this trade this year. It was a really nice trade. So again, example of what happens when price action shows you weakness to the upside. So everything is about price action. So here you have again news candle. So this is what I like to call news pattern. So you're gonna have imbalance. It would be good if the imbalance was from the news. So this big candle is clearly from some news. So we call it news candle. And then you're gonna have a weakness to the upside in form of this ascending price action. You're gonna have a breakout, you're gonna have a retest, and you want to get involved in short opportunities here to fill this imbalance. So this is what we call our high probability news pattern. Okay, so you see that we have this bullish move to the upside, clear inefficiency. You see that the imbalance is, you look at how much empty space, you know, price has left, and then price is bullish, retrace, breaking the highs, and then boom, we're breaking the lows, and then retracing, and again we're breaking the lows. And I wanted to get involved in this quick continuation. So it was basically something like this. If you break down this chart, it was imbalance left behind. It was retrace, breaking the highs, break of the highs, and we break the lows. We made a change of character. We then retrace. We broke the high, the low again. Confirm that, you know, we want to take that imbalance, that, you know, structure has change of character, break of structure, and I want to get involved in this sort of block here to fill that imbalance here. And this is what happened, as you guys can see. So basically, you know, price is going to dictate to you if you can, you know, take your trades, you know, and use the imbalance as an extra confluence in your advantage. Because I took this entry here because I knew that price is most likely going to fill all of this empty space. Because again, imbalance acts like a gap, okay, in the market. It usually gets filled because the buyers were too quick in the market. At this point, the price left even efficiency. And when you have trades, you can take that trades in your advantage as a direction. So you know the direction is most likely going to be bearish, and you have your trade here. Of course, you need to have a lot of other confluences, and then you take your trade and you target that imbalance. So using it as a target. But again, price is telling me a totally different story here. Price is showing me weakness to the upside, momentum to the downside. And then I know I'm reacting accordingly to the price action. And here is something completely different. Here is, we have the imbalance, but price is telling me that I need to go long here. Momentum is bullish. So yeah, a quick example, guys. And also, this is the really good example of how, again, people are over focused on imbalance and liquidity sometimes, and they're gonna miss just the good moves. So at the beginning of this impulse, guys, here we have this massive bullish move to the upside, clearly an imbalance candle, clearly news candle. I bet that a lot of people here, when they saw this, they're looking at this bit of price, everything, they're looking at everything, and they just want to short, because they want to get this, to target this imbalance. They want to have a confluence of targeting this imbalance. This is how that gets in their minds, and they do not think correctly, because again, they have a bias in the market, and they do not react based on a price action and what the price action is actually doing. what happened? Price was breaking the highs, retracing, breaking the highs, retracing, breaking the highs, retracing. We didn't have any change of character here, so price was making liquidity here. So if we had momentum to downside here, price indicating to us that there is a shift in momentum, the momentum is starting to get bearish, then we can take our trades to fill this imbalance, because then price will indicate to us there is no momentum to the upside and there is momentum to the downside, and then we know, okay, now I'm going to take advantage and I'm going to target that imbalance. But price action is telling us totally different story here. Price action is moving, and right now here you have this liquidity, a little bit of liquidity, break of structure, and then boom, retrace, and then momentum in market. And then people are looking at this, and they're looking at this, and they're trading this here. They're taking their stop loss, or some of them were a little bit more clever, and they have a little bit of liquidity here. So they're looking to trade based on this extreme. And then again, they took their stop loss, they're over focused, but feeling this imbalance, taking this imbalance, okay? And they take stop loss here, they take stop loss here because they want to target this imbalance. And what price action is doing here? What price action is telling us? What price did? Supply failed, supply failed. You have this corrective approach here, and then you have a breakout, retrace, momentum. So impulse, momentum, impulse, and then you have left this order block. Price made a little bit weak and then started to correct. So we have weak. What happens when price action after the week we have a correction? That means that week is respected. We have imbalance to get filled. We have liquidity to take, and then price action just doing this. Oops. Boom. Moving to the upside. It doesn't care about this imbalance. Do you understand what I'm talking about? Sometimes you just need to focus on what price action is doing. Here, price action is clearly showing us that there's a shift in momentum, shift in market. There's a momentum to the upside. We get all this supply taken out. There is a flip, supply to demand flip. Demand is in control. We have liquidity as a confluence. There is an entry to the upside because again, trend is bullish. We're moving bullish. Okay, and there's a lot of people who are getting trapped here because they want to trade this imbalance, and price action is just continuing to the upside, moving up like crazy. It doesn't care about this imbalance. So this is what I'm talking about. Imbalance is there. We can use it as a good confluence, as a direction. You take your trades, you want to target that imbalance. Imbalance gets filled 70, 80, 90% of the time. Price is usually going to come back to take this imbalance. But you need to understand that imbalance doesn't need to get filled right away. Sometimes days, even weeks can pass before imbalance gets filled. So it's basically like a gap. It acts like a gap. So sometimes you are gonna wait before you see that. And do not be the type of the trader who's gonna see this and is gonna only that is gonna be in his head, and he's gonna take shorts here, aggressive shorts. He's gonna take aggressive shorts here, because he saw imbalance. So just do not be that guy. Okay, imbalance and liquidity are important, but they're not everything. Focus more on price action, because again, guys, price action is the language of the market. Once you learn that language, everything is gonna be better. Everything is gonna be different. Okay, so yeah, that's pretty much it about this video, guys. Hope you enjoyed it. Hope you learned something new. And yeah, see you in the next one.